Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Thursday, January the 12th, 2023. It was a very wild and crazy day. And not only just in the NASDAQ and the S&P. I don't know how many of you actually watch like the 30-year bond or the 10-year note. But today, the 30-year bond was absolutely all over the board and quickly, along with the NASDAQ, along with the S&P. It was a maddening day. All started because the CPI data came out exactly as expected. So what the consensus was, that's exactly what happened. And so the market really didn't know what to do. Initially, it tried to pop higher. It dropped significantly, ran then to session highs, and then dropped again, and then spent the balance of the day working its way higher again. So while that appeared chop crazy up, down, and sideways, it actually cleared up a lot and allowed me to put some labeling here on the charts. So trying to attempt to just decide, okay, what are you guys doing and what parameters can I wrap around it? And where do I think maybe we get a turn? Now, again, I don't believe anything really has changed in terms of what is truly being expected by a lot of larger firms. So I think when you have a day like today, based on those numbers, we again see a lot of accumulation distribution type moves, or like just jumping out of one, jumping into another, following, just moving it all around, particularly in the bonds, in the treasury markets. Very crazy. But again, even as I get the results of the auctions, which by the way are available and you can sign up and they'll be sent to you via email each and every day, the very short-term paper, in other words, the 4-week, 8-week T-bills, are well above 4%. In fact, they're now pushing well above 4.5%. And so that's the absolute short paper. And so the craziness in the 30-year note, 30-year bond and the 10-year note is of equal intensity. But it's, I believe, just big trading on just opinion on what's going to be going on with the bonds, what's going to be going on with interest rates for the balance of this year. And while there is a very high chance in the bonds that we're just going to see the continuation of a B wave within, now from the all-time high in the bond market, particularly in the 30-year, down to the, excuse me, recent low, was 5 waves down. So the bonds, at least the 30, the 10, the 5, all of them are doing ABC counter trend rallies. So in essence, what it really begins to tell us is that ultimately interest rates will continue to drop. Because when we're done doing 3 waves up, we should do another 5 waves down. So that's just the longer term prognosis on interest rates. But in the meantime, we have a period now where the rates, the rates themselves, the yields are again dropping, but it's within a B wave. So we still have that C wave down that's going to take us. So in a yield basis, we have higher rates coming. Right now, we're in a period where the yield is going down and the bond price is going up. So in the bond price, we've done 5 waves down, but we're still looking for the bond price to increase. And when that happens, the bond yield will drop. So while that's all being factored in, we're seeing that overflow of what's going on coming over. Well, if the interest rates are going to be dropping, and trust me, they jump onto CNBC, they jump onto these programs and they talk about it. And it's the rally, the counter trend rally itself in the bonds should have been expected and has been working itself out for quite some time. And so that part's going to continue. Over in the equity markets, we've had a big turn of events because there was all of this buying in anticipation of, again, the Fed not raising rates as much as they think they're going to, the Fed coming out and saying that inflation is under control. I mean, they're going out on the stump, folks. But I hope you're all reading the articles about the people that are getting paid to do that, what they're getting paid, and who they're getting paid by. So the underlying story here is that inflation still exists. Yes, there was an adjustment made to inflation on a consumer price basis. And most of that came on the smoke and mirrors that they can toss at us year over year type figures for gas, for other items. But what it also factors in the parts that are not coming down and likely continuing to go up. But year over year, we're not seeing that great of a percentage change. Again, when you're talking about year over year, you're looking at December of 2021 versus December of 2022. So again, not a whole lot of difference in a lot of this. So in any case, inflation's still there. The Fed, from what I've been reading, is still saying, please don't get all intertwined with what's going on in the treasury markets, what's going on with the rallies, et cetera. Or I guess the banter that's being talked about. But in any case, the count itself here in the NASDAQ and the S&P, as far as I can tell right now, remains as given. So I do feel that this is all minor one, and we are still within a minor wave two. Now, I can bring this back out to the 4-hour chart and just show again, here's the intermediate wave 1 and 2, here's the minor wave 1 and 2. So we're ready to drop in that 3 of 3 of 3 move, right? So I'm looking for this to finish so that we can continue within that third wave. I still believe that's going to be coming on, but it's playing itself against right now. Remember, I talked about this, and I said, if the treasuries go into an ABC, which will show that yields and rates are dropping, bond prices are rising, what will the market interpret that as? Well, inflation must be under control. Money is now cheaper. Buy. Well, and that's what's happening. Now, what I was discussing at the time is like, how are the bonds going to get back up to, with the possibility in the 30-year bond that we can get up to 145 in the bond price? That's a lot from here. And what's that going to tell us in terms of what the rate will be, what the yield will be? We'll wait and see. In any case, I believe we're now even closer. So you can see that here we have the larger. Now we're up to the minor degree. So big degree, intermediate degree, minor degree, and next we're going to drop into a minor wave 3. And again, so we can break it down. And it continues to break down pretty clean by me allowing the market to do what the market wants to do, giving my best call at each level, but allowing for that continuation based on my knowledge of Elliott and where fibs are lining up. So again, nobody's wrong here. There was glorious trading today, glorious trading today in many different sectors, not only of the equity market, but just in classes, in terms of and gold. Gold was on a tear today. Crude moved around today. The indexes moved, the treasuries moved incredibly, and several individual stocks. So what am I looking at from here? Well, let's go back down to that hour. Let's open it up, right? So we have, there's minor 1, ABCX, AB. Oh, we're in that C wave, okay? Now, granted, could have been done there. Nope, kept going. Is it done here? Nope, because all I got is 3, and I got a 4. Now we're in the 5th. So it's cleaning itself up. Whatever's going on in between, I don't really care. The count is cleaning itself up. And this was very tradable. Now that's the number. So, you might want to steer clear of that. But this was pretty obvious. And it went and it went. And it was a great chance to just jump in and you're going to make 200, 300, 400, 500 scalping. So scalping was big right there. And you can play it. And then the balance of the day was just indicatively and even confirmed by some indicators, just going to be up. Yes, we had extremes. Yes, we moved in both directions. But the overall pattern shows you that we went up. So again, 1, 2, 3, 4, we're in the fifth, and I probably could go 1, 2, 3, 4. We got one more, get us above there. And where can we go? I'm really believing that we're going to start to run into a brick wall. Ultimately, we have that stronger resistance up here at 11,735. Does the market really want to add another $200 from current levels? It may. And the reason why is we have individual stocks, everything. First of all, a lot of things are expiring. It's a weekly expiration tomorrow. But we have a lot of individual stocks that are going to be heading for particular numbers that we haven't seen in quite a while. So particularly Apple. I think Apple will be played pretty strongly tomorrow. I think Tesla will be played very strongly tomorrow. I think that Netflix is going to be in play tomorrow. Microsoft for sure will be in play tomorrow. And I think it may come in both directions, and it's going to come at varying times in the day. So it depends on how the asset managers set up their algorithms. What are they going to put out first? But a round of buy orders, a couple of stronger rounds of buy orders, rounds of sell orders, some stronger rounds of sell orders, etc. How it's all going to be played out during the day. And where they ultimately we're going to want to end at day's end. So in Apple, 134 to 136. In Microsoft, you've got 235 to 245. In Netflix, we're right here, 330, 340, down to 320. So you got a bunch, you got room. If they come in and just start to sell it, it's going to force that downside hand. So Tesla, this is where it liked ending up last week. So maybe they're going to try to do it pretty much similar, 123. If they can squeeze out some more, they got another couple of strikes they can squeeze. So that's going to have a play, of course, in here as to where we might end up. So I'm going to just put in some extensions, again, based on Elliott and Fib relationships. And right now, I'm just going to try to see what we could get out of. I'll do it to there. Now I got to do it to there. Might be a little bit off. Okay, so wave 5, and here are the Fibonacci relationships to a fifth wave to a third wave. Actually, most common was 0.618, that wave 5 was 0.618 of wave 3. If that's the case here, then we're looking at 11,611. And above that, we have 11,653, 11,693, and then ultimately we have 0.618, which would be for that minor two at 11,735. So we got it pretty much stacked up. That being most common, and then actually 100%, which actually is above all this. That I wouldn't think we're going to get up towards 11,800. It would be a strong push. And again, a lot, I think, depends on where the bonds end up. So, and there's a lot of play in the bonds. In the 30-year bond, a lot of play between 129 and 132. So again, everybody's got a big range. I didn't mean to do that. I meant to do this. Over in the S&P, oh, by the way, before I do that, look at on the hourly, we're in alignment, total alignment. Everybody is heading up, pointing up. Not steep, not even these. It was nice and steep during the day, but not right now. We're kind of in a different mode. Going up to the daily chart, it's a little bit different. There's the 200, there's the 50, and we've got the 5, the 8, trying to get up to it. So this one's looking a little bit more toppy than the hourly. Now, we'll see. We will see. I think we need a little bit more to get above today's high and then finish this up, see if we don't get that reversal. And again, same ticket, folks. Once we get a reversal going, I am thinking it's going to go. And this was very orderly without a lot of noise. I think there'll be a lot of noise. There'll be a lot of like, oh my God, et cetera, et cetera. All right, here is the S&P. Again, same story. You can see, let me open this up a little bit more so we can see these. Get this going. There's the 200. We came up and kissed it. We kissed it today. 40-20, the 200. What's up next? 40-30 to 40-50. That's been pegged by the street. That's been pegged by fibs. So we have the same type of account. Oh, looking at the moving averages. 50 now, 50, the 21, the 8, and the 5, all heading higher. 200 still getting pretty flat. That's the interesting thing. The 200's flat. It's flattening out, but it's going to need all this to flip above it for it to start to turn and move higher. All right, back down to the hourly. So let's take a look at the internals here for the S&P. And it's the same as in the NASDAQ, in that we have a 1, a 2, a 3, a 4, and we're inside a 5th, which will likely bring us up above today's high. So then what do we have? We have 40-25, 40-30, 40-35, et cetera, all the way up. Now, one other layer that I can add would be wave, 3 to 4. Doing that to that to that. It might be a little off, but we're in that same area. 0.618, 40-34. Or wave 5 would be 0.618 of wave 3, 40-34. We have 40. So we've got 40-21, which is the existing high. 40-30 for 40-34, 40-45 to 40-55. And then we have one extra level up there at 40-64. But the 618 for the minor 2, lining up. 40-30 to 40-34, lining up very clean. So I would be looking for that tomorrow. Again, it's expiration. We do have some numbers, but they're marked in the green. So consumer sentiment, and there's another that comes out. So I watch for those tomorrow morning. They may help one way or the other. This is where I'm going to kind of finish it. It was a wild and woolly day. And I'm kind of anticipating that we may have the same game plan tomorrow, where we could get a lot of volatility, despite or in spite of what the volatility index actually did today. VIX was down. VIX is below 20. Did it feel like it was below 20 if you were trading one of these indexes, or if you were trading the SQs, if you were trading a stock that was really on the move? No. So I think that something is going on with vol. VVIX, VIX, UVXY, et cetera, because I don't think it's really reflective. Either that, or we have suddenly become extremely complacent to everything. Whether the market goes up or down, we're just complacent. Because basically low volatility suggests complacency. And I just don't see that. I see a lot of changing of hands. So again, the volatility was pretty strong. I expect it to be so tomorrow. Day trading, actually, again, I feel was the ticket for today. I think position trading and just trying to put on hedges and lift hedges to hold on to a position could have been very tedious, because the moves were quick this morning, very quick and mean. And pretty much, actually, during the day, we got a lot of those as well. And I suspect we may see the same thing tomorrow. That's where I'm going to complete. And our next update will be on Sunday. Oh, before I forget, I will do an Eye of the Storm podcast over the weekend. Monday is a holiday, I believe. And so it's Martin Luther King Day. From what I understand, I could be wrong. If I'm wrong, then I definitely be making an update on Sunday. If we're trading on Monday, Martin Luther King is the week after. Anyway, next update, Sunday.